What is going on, people? I want to do a quick video about PayPal. Ticker symbol, hashtag, $, like, share, subscribe, PYPL. PayPal is currently trading around 55.50 and it broke a 52-week low. PayPal had one of the best earnings that I can remember as covering PayPal, which is probably in the last 2 or 3 quarters, something like this. I'm not a huge PayPal content creator, but we got a new sheriff in town, and that new sheriff is Alex Chriss. He's the former senior vice president at Intuit. He was head of their largest department that brought in around 50% of the revenue of PayPal, and he came in and he literally cleaned house. He's like, listen, I've been here for 1 month, and I'm telling you right now, we will be growing profits. We will cut this shit out and we will focus on profits. And he actually specifically was talking about gaining transactional margin using Braintree, right? Branded, unbranded. You guys hear about this all the time. All content creators talk about branded, unbranded. Branded is PayPal as you know it. Literally check out PayPal. Unbranded is when companies use PayPal as their own payment processor, but it doesn't say PayPal. PayPal, branded, charges a better margin, transactional margin, but unbranded charges a very small transactional margin. And he believes that we can raise the transactional margin in unbranded, Braintree, which is huge. Now, transactional margin did still go down, but slightly. Very, very small. The number has been the smallest it's been in over a year. And they reiterated that next quarter, transactional margin is going to go up. That's the inflection point. Transactional margin is going to go up because they can increase the transactional margin in using Braintree in the United States, but also because they're targeting multinational multi-regional locations where the transactional margin is higher. It costs more to use unbranded globally as opposed to within the United States because of all the competition. Really good. The guy came and said, listen, we have a singular goal and we're going to focus on growing profits and transactional margin in PayPal. Cut all the other shit out. Dan Schulman, since 2015, has been doing tons of acquisitions, some good, some bad. Braintree, Venmo, good acquisition. Companies like Happy, bad acquisition. And a couple of others. Although, there's a shit ton of profit there, over $200 million, but it doesn't help the bottom line of PayPal. PayPal is a payment processor. And this is something that Alex Chriss is stating and iterating. Guys, we are a payment processor. As a matter of fact, in the last 5 years, 70% of all adults have used in some way, shape, or form PayPal. 3% credit card, cash back. Rewards using PayPal credit card. Also, PayPal savings account, 4.5%. A lot of people are missing out on that. Everybody is fired up. They are getting behind Alex Chriss because Alex Chriss is here and he means business. He hired a brand new CFO. I forgot what her name is, the lady. And she's coming from Ernst & Young. Ernst & Young is one of the big four accounting firms. Tons of experience. Now, stock-based compensation is probably going to go up, but that's okay. The float of shares went down. Why? They keep repurchasing stock, and they still got billions of dollars to spend. If I'm not mistaken, I'm lying, like $1.9 billion to spend. Last year, $5 billion stock repurchases. This year, stock repurchases gonna be $5 billion total. They think $3.1 billion already spent, and next year, another $5 billion. PayPal is currently up around 6.5%. On the news of PayPal, Block is also up, even more than PayPal. Alex Chriss said, we have tons of data that other people just don't have. Since 70% of adults have used PayPal within the last 5 years in some way, shape, or form, they have a lot of data that they can leverage. All right? It's massive. Really, really big news. Now, if you guys want to know more about the numbers, I suggest you watch Tanner, Future Investing's live. He did a follow-up video as well. And also, Couch Investor. He had a really good recap. They're going to dive in the numbers better than me. But I can tell you something very, very seriously. We've been absolutely beat up with PayPal, and the price point of PayPal is ridiculously cheap. Low teens, PE, forward PE, higher single digits. Super cheap. And if you believe that things are about to turn around and that transactional margins are going to go up, which I believe they will, now is your chance. Bada bing, bada boom. Now is your chance to get into PayPal. Some people think PayPal is dead. Alex Chris says PayPal is not dead. Also, Venmo for teens. So not only do we have 70% of all adults in the last 5 years, and PayPal is still over 40% market share for payments online. Guys, don't be sleeping on that. He says we now are going to be dealing with the teen accounts. This is massive, massive opportunities. Also, they're only now going to start to communicate Venmo and PayPal. So right now you have PayPal and you have Venmo that are both under PayPal umbrella, but they don't communicate. It's like they don't speak the same language. It's like, bro, what are you doing? Venmo, PayPal, you're all the same shit. You have to speak the same language, but there's no communication. It's like two different universes. You have Marvel and you have DC. It doesn't work like that, you know? They got to be able to communicate with each other. The main thing that came out of this is Alex Chris is here to clean shop. He means business, and he's going to get it done. He was super freaking enthusiastic. Super enthusiastic. And he already got rid of Happy Brands or Happy Returns, whatever it's called. I covered that. Where they're making a shit ton of money on that, over $200 million. They're getting like 7 and change. They bought it for like maximum $500 million because there was 4 deals for $500 total. They made a couple $100 million, maybe several $100 million. We are going to see it next quarter. That deal we're going to see next quarter. We're going to see massive cash flow next quarter. And transactional margin should finally go up. It's going to be big. A full quarter of Alex Chris making things happen. Guys, PayPal is not dead. It's in a slump. It's not growing like it used to, but it's not dead. It's making $30 billion, $30 billion in 2023. I think they brought in $7 billion and change. I mean, it's absolutely massive numbers, guys. Absolutely freaking massive numbers. It's like the the amount of money that's coming in will support PayPal's business. Guys, PayPal is not going nowhere. You still have a great opportunity to buy. I'm not telling you to buy. I'm not telling you to sell. I'm not telling you to trade. I'm not telling you what the F to do. You guys do whatever you want. This is purely entertainment education. All I'm saying is, if nothing else, and you don't follow PayPal, you guys should understand that this guy, Alex Chris, is here to stay. He means business, and he's going to get things done. You could hear the fire in his voice. He was super, super amped up, and he has something to prove. Besides for that, he's young, he's aggressive, he has a lot of connections, he has a lot of doors that are going to open, and he brought in a brand new CFO. There's probably going to be other higher-end hires coming in. Stock-based compensation is going to go up, but they're going to buy up a lot of shares from the open market. $5 billion worth of shares to buy up in the open market. That's roughly like 8% of the current market cap. Guys, do whatever you want. The opportunity's here. Interest rates are going down, or the hikes are stopping. Next year, I think they're going to go down. And if there is going to be a recession, well, now the Fed has enough ammunition to lower interest rates to fight the inflation, like normally that's what happens. People were worried about a recession from the Fed because the interest rates are so low. Well, now the interest rates are really high, so the Fed can raise interest rates, they can drop interest rates to counter-attack a recession now. High interest environment, bad for fintech in general. Geopolitical uncertainty with the war, bad in general for fintech. However, it's been bad for PayPal for the last 2 years. Maybe it's time to turn it around. Now, I'm not a long-term PayPal holder. I'm going to be holding somewhere in 2024, and I'm going to be out probably in the next 6, 7, 8 months. Guys, let me know down below what you guys are doing with PayPal. The earnings was amazing. I highly suggest you listen to Couch Investor. I highly suggest you listen to Future Investing Tenor if you guys want to go through the numbers a little bit more. But I just wanted to give you my general synopsis, my general thoughts, my general thesis about what's happening with PayPal. And I think shit is about to get a lot better for them. I think Alex Chris is going to fuck shit up, for lack of better words, and not in a bad way, in a really good way, and turn this ship around. Is it ever going to see 300 a share? What do I know? I don't think so. But can I see 100, 120, 150? Absolutely. If it hits 100, 110, I'm out. If it hits 100, I'm going to be out. I'm going to sell my options, take my profits, and go buy something else. But until then, I'm here. Guys, thank you so much. If you're feeling this type of content, give me the likes, share, subscribe, and fair warning, I do own PayPal. Mostly in options, I own PayPal. So take it for what you will. Have a good day.